So today we are happy to welcome Murat Abur, the co-founder and CTO of Suade, the fintech startup that produces technology aimed to help comply with regulatory issues. I appreciate the time that you invested in this interview today. And Murat, tell us a bit about Suade. What do you do for the financial market, and what is your vision for the company?
So at Suade, I guess we were one of the first RegTech companies that came out in 2014, 2015. And really, the vision that we had for the company was that at the time, there were a lot of companies, fintech companies starting out that were competing with banks, doing payments or peer-to-peer lending, or even things like a lot of their, eating up their trading business. And so, coming from a banking background, there were things that I saw that banks did that startups most likely wouldn't want to do in the future. And we've seen that play out over the years. And so we took the bet that banks would still be around, 10 years later, but that they needed desperate help dealing with a lot of the operational and administrative burdens that come with running a big bank and managing risks on a global scale. And so where the intersection of all those things is regulation. And that is something that all banks have to deal with and have to understand and comply with and produce data and understand that data. And so really we wanted to set out solving regulatory problems for the banks, which is sort of where this RegTech term came from, to differentiate ourselves from the traditional fintechs that were doing actual finance stuff that may or may not be regulated. And so, yeah, that was, I guess, our vision in that space. We started out with a focus on prudential regulations, which are more, I would say, quantitative and objective compared to the sort of softer compliance-based regulations like KYC or money laundering, which are a bit more, I guess, they're gray, they're less objective in nature. We focus more on the sort of computational calculation side of things, capital, liquidity, and risk, and so on.
Talking about regulation technology, RegTech, it's kind of a sensitive topic in today's reality, in today's obstacles, and the fintech world in general. And as regulations, they're like really complicated, and they become even more complicated from year to year. Unfortunately, because of its manual part. And of course, you are aiming to solve this problem. I mean, your company, Suade, but that's why I'm excited to know more about the fundamental complexities that you're facing, while you were looking for your product market fit and during establishing it.
I think, yeah, that's an interesting point, and that's generally a lot, that's most people's reaction when they approach regulation for the first time. And so an analogy that you can think of, it's a bit like approaching a tree by looking at its leaves. If you look at a tree like that, it becomes very hard to understand the tree as a whole. Whereas if you start with the trunk of the tree, and you see that the leaves are coming out of branches, which come out of the trunk, and so on, it becomes much easier to understand how the tree works, how the tree grows, where it's going to go in the future. And this has been sort of our, I think, breakthrough approach to dealing with regulation is starting with the trunk, which is the core data attributes that eventually feed all the regulations and all future regulations that you deal with. And this is the sort of bedrock of our system and our platform, which is the FHIR open source data standard. And this is a data standard which I don't like to say we created. We did create the technical specifications, but we actually discovered the data within the legislation. And so in many ways, the FHIR data standard is the data model that exists within the legislation written by the EU and the Bank of England and or the UK government and the various regulators around the world. When they publish regulations, they are inherently describing a data standard, even if it's in words and not in sort of technical specifications. And by unearthing this data standard, you see a lot of similarities. When a new regulation is published, they'll reuse similar terms, similar attributes. They'll reference paragraphs from previous regulations. And so all of that you get for free if you're using this data standard. And so it really makes dealing with new leaves and new branches, if you will, very, very simple.
Okay, and how does your tree look like these days? Could you please lead us a bit through the current situation in the UK's talent market and the RegTech market, I mean, this part?
So we started off here in the UK, and we quickly realized that a lot of the UK regulation is basically coming from Europe, and so we branched out into European regulations very quickly. And since then, we've been dealing with regulations as requested by our customers. And so we've done stuff in Singapore and other places in Asia and Australia, South Africa, South America. We're doing a big push in the US now, and Canada. And really every new jurisdiction that we visit, we realize that a lot of the regulations that exist there have many, many overlaps with the existing regulations we've implemented. And so people are often surprised to say, oh, you hadn't seen this until, last week and you're already fully up to speed and the software can handle it. And then it's really, again, I don't want to take credit for the global harmonization of regulation, but there's a lot of work going on at the legal level between these governments and central banks around the world to ensure that the financial systems here and in Asia and in the US are compatible, so that when people trade across national borders, the risks are well defined, the products are well defined, and regulators can have that global view of the financial markets. And so that same harmonization that happens at the legal level, we can bring to the data level, and then therefore to the software level. And so yeah, it's a very exciting times, and there are new regulations published every few months. And so not only is I guess the platform growing, but also it's evolving as regulations change as well.
And is it expensive in today's reality to hire the internal team that controls alignment with the FCA?
It is, I think it's one of the biggest, we had a webinar a few months ago, and it's one of the biggest problems that people highlighted is experts, subject matter experts. It is very, very, they are very hard to come by, and they're often very expensive. And because of their focus areas, it's not something that scales very well.
Mm-hmm.
It's very hard to, you can't read a 600-page regulation faster if you have 10 experts, right? Because the regulations are often interconnected, and someone really has to read the whole thing to digest, what it's trying to achieve and so forth. And so a lot of the work we're trying to do is to use NLP and machine learning to automate that regulatory understanding. So again, relying on these similarities between different regions, we say, okay, if this paragraph looks like this, and we've seen something similar in another geography, then potentially the logic and the software that applies that regulation to your data is also this one that we have from before. And so you can reuse modular software components to deal with new regulations in that way.
Talking about the market in general, how do you see the RegTech can transform it? Like all the points, starting from price and like team building, then processes and acceleration of them, productivity, growth, etc.
Yeah, so I think, regulation, the intention of regulators is to make the financial system safer
Of course.
for consumers and people that are in the market, which ultimately everyone in the world is that is banked is in the market in some way, whether you have a deposit account or a mortgage or you're trading financial derivatives, you are in the market in some way, and the economy affects you. And so what does that mean is that the regulations are designed to make the financial system a sort of a more fair playing ground. The challenge is that the rules are very complicated, as you said, and they take a lot of expertise to understand. So what can we do is we can actually use technology to implement those rules so that you can have a vague understanding of the rules, but the technology can alert you to what is going on and highlight things and potentially point you at the rules to read. And so the end result of this, I think, is that what RegTech can do is to make these iterative cycles of regulation faster. Because if you think about how the rules making system works, data is gathered typically on a monthly basis from firms. The data is analyzed by supervisors and by regulators. This data then forms a sort of consensus picture about what's going on and what's happening to the economy. And then, other financial levers can be pulled. They can change interest rates, obviously, but they can do other things to the capital requirements and so on, and publish new regulations to adapt those. But this process takes many years, right? And so we saw the second edition of the capital requirements regulation come out, but it was many years after the first one. And if we can shorten those timelines from being 5 or 6 years to maybe 6 months, it means regulators can be more proactive in how they regulate. And potentially, if the technology is interactive enough, different banks or different business models can be regulated differently as well. And so this becomes a lot more dynamic and a lot more fluid as a system. And so we often say that it's moving from a world where the CFO and the executive team of a bank may speak to the regulator and on the phone, this traditional, imagine that 50 years ago, how regulation used to happen, they'd call up the Bank of England and say, oh, how are things going? How are your finances and how is your balance sheet and so on, to now it's more of a data dialogue. Obviously those conversations still happen, but really a lot of the information is transmitted in that data. And if that data is flowing every month, it's great. If it's flowing every week, it's even better. Every day, every hour, to the point where the data is just a continuous back and forth flow. That's, I guess, the stage you want to get to. You want to build the technology to enable regulators to have that kind of power over the system.
And do you think that open source can transform how financial regulation is implemented and supervised?
Absolutely. And that's, I think, the first decision we made was to open source our data standard. One, because the legislation, the regulation is open source. It's free to read and free to view online. But more importantly, open source is a fantastic product development model for problems that are shared amongst people. So security, for example, is a great, a great use case for open source technologies. Everybody wants their software to be secure, right? And so publishing security software open source means that anyone can find problems, find bugs, and make it more secure. And so similarly, regulation is a common problem across the industry. And I think, maybe during the financial crisis or, 10 years ago, you might have found, this banking mentality that, let's try to get around the rules and find ways to circumvent the regulation to make money. But that thinking is largely gone. Right now, everybody wants to be fully compliant, as fast and as cheap as possible, which makes it a great use case for open source. And I think definitely the more open source work that banks and regulators can contribute to, the better it will be for the ecosystem.
Do you see ways to explore and promote opportunities for open collaboration between financial institutions, technology firms, services providers, and regulators, like in general?
Yeah, I mean, there's definitely there are many projects underway that that involve regulators, technology vendors like us, and the regulated firms, banks, etc. And these projects are, um, what's interesting about them is that they tend to, um, the momentum of any project like that, it depends on the people involved. And every good project needs a good leader. And so depending on the leadership team, the momentum sort of comes and goes with these projects. Um, and so it's hard to, um, they're often kind of hard to coordinate, I think. And so people find them frustrating because they move slower than I think everyone would like. But it's a hard problem to solve because it's a very big domain, a very complex domain, and it's very hard for a single person to even lead these kinds of projects because people that understand the public sector, regulatory side, the banking sector, private side, and also the technology are very few, and so it requires a lot of collaboration, and decisions need to be thought through very carefully because they have huge, wide-ranging impacts. And so you can think of something like the airline industry. People often say, "Oh, I can't believe we're flying airplanes that are 50 years old." Um, but any small change you make to an airplane has to go through many layers of evaluations and steps and so on, because you want it to be safe. Just like the financial system, it's not necessarily, innovation is not always the right answer, and so you have to move forward, but you have to move forward carefully.
Mhm.
And so striking that balance um, is a challenge, and the more I think these three parties can work together and speak, the better that balance will be going forward.
Thank you so much. And do you think that like the data safety is the like primary problem of today's businesses in fintech? And talking about RegTech also, it's like you delegate a lot of work that is connected with personal data and sensitive data to other people. And the primary problem here is safety.
So I think, yeah, data privacy is a very important topic, um, and again, it's a bit of a, if you don't give someone your data, then they can't help you as much, right? And so
Right,
um,
Ethan. Yeah.
you have to make this trade-off between, I guess, the risks and the benefits, of that sort of situation. And again, it's a tough decision, but I think the way the banks approach it, and I think the correct way to approach it, is they sort of tend to grade their data. So they'll look at sort of their database and they'll say, on a scale of 1 to 10, this column is a level 5, privacy attribute. This is a level 3, and they'll grade their data. And based on that, they'll say, okay, we can give you this data at sort of a quasi-public level, and then this data, which is more private, we'll have to deal with without giving to you. Maybe you give us the software, run the software on premise, and so I think banks are very careful in dealing with data privacy issues, and they're very diligent in that respect, I would say, at least in our experience. Um, but then there's also I guess, the notion of expiry, right? So if there's some data which expires, right? So for example, I went to eat at a restaurant, 5 years ago. That information is probably no longer as useful as where I went to eat last week, for example, because my taste may have changed. I may have become vegan since then. I may have moved to a different country. Um, and so data also expires. And so people always say that, data is the new oil. Oil doesn't expire. And so maybe data is more like a bit more of a ephemeral thing, which it's valuable now, but its value decreases over time and it depreciates like a fixed asset. Like you buy a laptop today, but in 3 years that laptop is worthless. And so I think it's also good to think about data in those terms of timelines. And once you think of it like that, it becomes easier to find this middle ground where you can say, I'm comfortable giving this data away and getting this benefit from that, um, and so on, and doing that calculus.
As I understand, the primary reason to turn to RegTech is decreasing costs and acceleration timelines. Yeah. And probably you could describe how exactly RegTech could help reduce the costs for the company.
Well, I think there's in much the way that open source distributes the workload of developing a product, RegTech enters that space where you can build a solution in-house that solves a particular regulatory problem, but it's very likely the solution you have built is 95% identical to the solution that another bank has built. And the reason for that is that there's not a lot of um, proprietary input into your regulatory interpretation. There is some, and those sort of interpretations can be configured, if you will, as sort of choices in a software. But in terms of the actual, I guess, program that you're writing, there's a huge amount of overlap. And so a RegTech provider can leverage that sort of economy of scale by doing it once and doing it potentially better for everyone. And so I think that's the real benefit on the cost angle, is that it's simply an economy of scale. It's easier for a single technology company to produce a solution for a particular regulatory problem than for every bank to do it themselves individually. The second thing you mentioned is on um, the accelerating timelines and changing regulations. Um, the other benefit that happens is that if you're a small player, and the regulators are very conscious of this, they don't want smaller players to get left behind. In the financial crisis, we had this issue of too big to fail,
Mhm.
right? And so we don't want a financial system dominated by 4 or 5 massive banks and just negligible players otherwise. You want a system that is a bit more fairly distributed. And so to achieve that, you have to lower this regulatory barrier to entry. And so one way to do that is to provide a technology that actually houses a lot of the information and the regulatory knowledge that you need to get up to speed um, for those smaller players. And so you can see the technology as being a way of also distributing information. And so a very good example is like tax software, right? So in the UK, there's a great sort of self-assessment online tax tool where it just asks you, what was your salary? How much tax did you pay? What is the number from your pay slip? Did you get interest on your bank account? And it computes all the tax you need to pay and then tells you, put your debit card details and you can pay your tax here. Um, it's such a wonderful way to pass on all that tax information. You don't have to read the tax code to do your taxes, right? And so it's very similar that a small, why should a building society have to read thousands of pages of regulation to figure out which page applies to them, which paragraph works for their particular products? Why can't they just use technology that takes care of that for them?
And did you notice some specific trends that are coming in 2022 in your field?
That's a big, everyone's making predictions now for 2022. I think the one thing you can say is that there are two big sort of macro trends that are happening. The first is um, interest rates are rising. Inflation is, soaring. It was, I think, depending on the metric you look at, it's between sort of 5 and 10% in the past year. And, the target for inflation should be 2%.
Mm.
And so a huge disconnect there between what the central bank wants and what is happening. And so something has to give. And typically interest rates will be hiked to combat that. And when interest rates go from zero to something that's not zero, it creates a whole bunch of triggers in the financial markets. And so people will start shifting their assets, their investments, being more choosy when they're investing in riskier things like startups and technology, and so on. And so I think you will see people will be more choosy about which fintechs or regtechs they want to support or they want to invest in. And so I think it will be a make or break year for a lot of companies in this sector. They'll either shine or their stars will fade, um, which means it'll be a challenging year on the technology side. And the other major trend is COVID sort of coming hopefully to a close. From what people are telling us, things are getting better. Less hospitalizations, less deaths, less severe cases. And you see this playing out in the financial markets, people sort of selling off their COVID trades, and I think Zoom stock is down. And so you want to uh, you'll see that shift as well, right? So technology, people coming back into the office, a lot of projects that were on hold potentially because people wanted to brainstorm and whiteboard, and so on, will now be back on the table. There'll be a lot more creativity and I think innovation as well when people start interacting in person again. And so I think that will also make a difference. You'll see more ambitious, I think, plans and projects from people in the financial industry.
Did the COVID pandemic, if had a side effect on your team building ecosystem? Yeah.
Yeah, definitely. It's been I mean it's been good for business as a tech company. We really can't complain. It was very easy for us to go all remote overnight. Even servicing our clients remotely has been sort of our objective from day one. But it's been very hard, I think, emotionally. And as a small company, you get a lot of energy from being in the
Mhm.
same room. A lot of things happen, around the water cooler, so to speak. Whiteboarding sessions, creative ideas, people solving problems together. All of that becomes much more challenging in a virtual world. And
So,
so,
oh yeah, I'm
yeah,
sorry.
so
Continue.
we're looking forward to having more of a hybrid model. I think we all like being working from home. It also offers peace of mind when you want to focus. But definitely, I think we'll have more days in the office to collaborate and brainstorm new ideas.
So why not? So you have like a fully internal team, yeah? Or have you ever engaged outsourced workers for your processes?
We've always been, I guess, we've never had contractors or consultants
Hmm.
in the company. Um, I think in a small company, you want people that are um, committed full time.
I understand.
And I think you don't want someone here this week, gone next week, who has other priorities or is doing something else. Wednesday to Friday. You want people that are mostly there all the time that you can count on for their headspace.
And how did
Um,
you find such people? I mean, when you just started your company, it's really a complicated thing. You're so lucky, I think.
uh, yeah,
Yeah.
it's hard. Recruitment is hard. Um, it's hard to find good people, but it's also easy to spot good people when you do find them. And so you have to be patient. And I think one of the advantages we had is that we didn't take um, venture capital funding or investment until last year. We were largely a bootstrapped company um, for the first 5 years of our existence. And what that meant is that we could grow a bit more organically, both in terms of, we sold more product, we could hire more people, and growing slowly lets you build and really define your culture and how you operate,
Mhm.
what things are important to you. When you don't have a lot of money, you have to be very selective about what you do with your time and what you do with your money. Um, and so we spent, I guess, most of our time and our energy working together and building a good team spirit to sort of, I guess, deliver more than what, deliver more value than what we were costing.
Sounds amazing. I like the
Thank
way you say it. You love your team, you love your mates.
Yeah, I
That's
think it's
great.
and especially during COVID, you really appreciate that team spirit. We were able to sort of go remote, and everyone feels very comfortable with everyone. Communication, is generally good, and so it's been, yeah, you have to thank the team. It's not maybe the first 6 months was a one man or two person show, but since then, all credit goes to the team. It's really their hard work and their enthusiasm which makes everything possible.
And do you arrange online parties?
We do a lot of team on-sites, virtual on-sites, and activities and quizzes, and we had someone from Greenpeace who came to talk
Wow.
to us last week. We typically attend the Davos conference in Switzerland, and so it was virtual this year, and so we had a session where people split off into groups, and they saw different things from the Davos agenda, and then discussed them afterwards, whether it's climate change, ESG, or um, and so on. And so it was I think, yeah, you have to find new things to do every month so that people don't get bored. Um, but it's important to do, and to take the time to engage in stuff that isn't necessarily work related.
Great. Thank you so much, Murad. I really appreciate the time you invested in this interview, and that and that we finally here and we've done it together. Yeah.